Yes, okay. Yeah, welcome to the weekend analysis. So it is another day and another time. So I'm going to share analysis on gold. So this is gold spot, and I'm going to provide the highlight of the market for the next week. So it will be just 5 days of the coming week. So from 6th of November to 10th of November. So this is just an overview of what is possibly going to happen on gold. So make sure that you do your own analysis, and it's a very quick analysis, less than 10 minutes analysis. So make sure that you watch the whole video until you find that I'm talking about the market analysis in 4 hour time frame, because I do what to call the top down analysis from the monthly time frame. So let's go straight, and currently I'm in a monthly chart. So basically in a monthly time frame, we see now we have started a new month, and actually the previous month was very strong, bullish. So it always engulfed now the September month. So basically, this indicates that currently we are full looking bullish. And actually, I cleared my charts because I was just using the same analysis now for several months. So I have cleared, and currently I have modification. So nothing has changed that much, but there are certain areas that have been modified. But all in all, we are looking the same in the same direction. So make sure that you consider the buy directions based on the monthly chart, because it is looking stronger bullish. So any movement to the downside will be just correction. So quickly, let me go to weekly time frame. Okay, so yeah, it is slower. My internet is slow, so yeah, let me take this and yeah, go to weekly time frame. So in a weekly time frame, actually, what we see there is market is bullish, as I have said. And yeah, I have done those modifications now. For those who have been watching my analysis now in the past several months, like 4 months, actually I had a triangle idea in monthly and weekly time frame, but currently I have modified that structure now from the triangle to the an ABC correction, and currently, yeah, we are pushing up like this. So yeah, that's all. But mainly, we have an ABC to the downside, and it has already completed here. So now we are currently moving impassively to the upside. So and now in weekly time frame, we can consider this level here. So you see now price was playing below this level, and now in the past week successively price broken and closed above. So this week now tried to correct, to do some retest to this broken level, and then pushed up again. So in weekly time frame, we also see buyers are dominating the market. So now what I can say is just in longer projection, now in the long term projections, we see gold is bullish. So that's how things are going in weekly time frame. So quickly, let me go to daily time frame. Let me go to daily time frame. So yes, we can have some formations here in daily time frame. So in daily time frame, actually, as I was saying last week, actually, I had a lot of informations in daily time frame, but basically, I was looking for completion of this fifth wave to the upside, now probably being completed here, or possibly having further movement to the upside up to this level up here. So now, basically, though things remain the same, but what I can suggest here is we are playing above the level here. So and I added the psychological level. So I was saying now, if price is going to play below the psychological level, we can have some short-term sells. We can have some short-term sells, and they will be in a corrective mode. And once price is moving above the psychological level, when I'm talking about the psychological level, is the 2000 level. So when price is playing above and close above the 2000 level, we can just expect a continuation to the upside with those very I mean, what to call the shallow retracements. So if we're above the level here, so what are we expecting? So price may continue, as I've said, in weekly time frame. So price may continue to the upside straight from this level. Yeah, but as we move to lower time frames, we can see some possible corrections now in the coming week, and we can straightforward trade those corrections. So that's how things goes. So we have the 5 wave to the upside. Then let me go to the 4 hour time frame, my last time frame for the purpose of this analysis, and it is where I'm going to provide now an exact direction. It's where I'm going to provide an exact direction. So let me go. So internet is slow, it's down. Internet is down. So yeah. So basically, last week I talked about the diagonal, and I said this may be an ending diagonal. That means completion of the fifth wave to the upside, or it can be just a leading diagonal. It means a leading diagonal of the fifth wave. So this means that now we will be having this as wave one, then wave two, three, four, then five to the upside in the completion of the wave five in higher degrees. But basically now, based on the current formation, I have already marked this as five. Yeah, I have already marked this as five because I don't expect if uh, price will continue with the expected fifth wave to the upside. So basically the projection is now market has already started forming an ABC to the downside. So it has completed wave A and wave B to the upside. So mainly we'll be looking for the remaining 5 waves to the downside. So now those remaining waves to the downside will be in completion of wave C down. So mainly we'll be looking price moving to around it may be around 1915. It may touch those levels, but sometimes it's most likely to turn around 1945. So that's also possible. So now why I'm saying that, because price is going to go down to do something. What I can say is just to retest this level here. So it was respecting several times in the past, so it will go down to retest, and also have this static support. So we have static and dynamic support at the same place, so price may go there. And also if you do the Fibonacci retracement, actually you will find that there's possibility of price going down to those levels I'm saying, because they are the key Fibonacci levels. Now you see this is around the 50%, so price may go down to those levels of 1915. Yeah, in any way, so to check the 50% retracement, or it may turn around 1945, that is a 38% correction. So all those things are possible. So how are we going to trade next week? Basically watch for short-term sells, and actually we have got just a single opportunity to risk. So you can just immediately enter a sell trade on opening of the market, because we expect one, two, it may be in this way, three to the downside, then four, and finally five. So we can have a 1, 2, 3, 4, 5 to the downside. So we expect to trade this. So you can risk just immediately on opening of the market. We can have this. It may be a 1 ratio 2, maybe straight from here. So it can be a 1 ratio 2 trade, a 1 ratio 2 trade. So that's risky to reward ratio. So you put your stop loss up there, and then you'll be trading down, and mostly put your take profits now around 1945, even though we expect the price may go deeper beyond 1945 to around 1915. But mainly, don't be greed. Actually, you can take that smaller thing. And if you don't like to risk this trade, why I'm saying you have to risk here, because there's a possibility now, based on the weekly and monthly time frame, a possibility of price opening straight to the upside. So if you don't want to risk this trade, you can just wait the price down here and continue buying. So that's how you're going to do next week. So thank you for your time. Make sure that you like this video, put a comment if you have any addition. If it's just your first time, just subscribe to this channel, and just join our Telegram channel, where we do further discussion on the market analysis. So thank you, and have a powerful